Hey everybody, welcome to Mortgage Today for Wednesday, December 13th, 2023. And oh, what a day it was. UMBS were up 16 basis points bright and early this morning. Bonds were sideways to slightly stronger in the overnight session with no noticeable follow through to yesterday's CPI reaction. This morning's producer price index is typically not a top tier market mover, but in this environment of high inflation sensitivity, it can have an impact if it's far enough from the forecast. Today's result qualifies, albeit just barely. The core PPI month over month came in flat on a 0.2 estimate. Final demand rose 0.9% year over year. Estimate was 1%. Final demand excluding food energy was unchanged month over month on an estimate of being up 0.2%. Final demand excluding food energy rose 2% year over year on an estimate of 2.2%. As expected, the 2 p.m. news was all about the Fed's dot plot, with investors paying particular attention to the recent shifts in rhetoric being reflected on paper. That is exactly what happened with a 0.5 reduction in the 2024 rate outlook, effectively reversing the dot plot change from September. So 2024 dots show a 4.6% versus a 5.1 estimate previously. That's all that really matters right now, and that's all that the market wanted to see. The 2025 dots came in at 3.6 versus 3.9 previously. In other news from the Fed holds the benchmark rate and the 5.25 to 5.5 target range. FOMC median forecast shows 75 basis points of rate cuts in 2024 to 4.6%. Fed says inflation eased over the past year but remains elevated. FOMC rate forecasts show a wide range of projections for 2024. The median estimate shows rates at 3.6 in 2025, 2.9 in 2026. The FOMC vote was unanimous. The Fed holds the IOR at 5.4, discount rate at 5.5, and will continue the same pace of reducing Treasury and MBS holdings. It may have seemed that we were paying too much attention to today's dot plot on the approach, but in hindsight suggests it could not have been more overdone. The rates plummeted as the dots revealed that September's big revision was completely erased. In September, Fed members priced in 50 basis points of higher for longer in 2024. After the dots, some market watchers worried that Powell would push back on the rally in order to temper the volatility. He did not. He simply said the same things he's been saying. Hikes are likely done unless data manages to suppress way. Bonds rejoice across the curve. UMBS 6.0 ended the day up 61 basis points. The 6.5 was up 36 basis points, and the 5.5 was up 95 basis points. Hopefully some liquidity is coming into that coupon. So 6.0 is ending at 101.41, which puts us up in a brand new range that hopefully we can stay in, because that would help us all out. We also got news that the luxury home builder Toll Brothers reported better than expected earnings, with gross margins coming in higher than guidance. Toll is seeing strong demand, although average sales price are declining, but that's more due to product mix of selling some cheaper priced houses. Rising prices, they're actually raising prices on an apple to apples basis.